Studios. The AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. Hi, Jules. Great to have you back.
Hello, Danny. Thank you. Nice to be here. Of course, on a day when it's been a little bit of a flat momentum on the overall market, but still trying to hold or close to those records we reached yesterday.
Yeah, absolutely. So pretty much flat on the day if we get up the CBO 200 and have a little peek and see where it's at. The ASX 200, let's just see where that is currently closing. So the CBO 200 almost down 2 points, which for all intents and purposes is absolutely nothing. And the ASX 200 off by about 8 points, so pretty flat as well.
Yeah, absolutely. We're talking though about Bubblicious. Is it a boom or a bust for Bitcoin? Getting very close towards records, and of course hitting a record in Aussie dollar terms above $100,000. Marko Kolonovic from JP Morgan, he's very much in the camp that seems to think this and the rise in US equities is a bit of froth, but of course there's a lot of people saying, look, it could go even further because of the fact you've got the halving coming up.
Absolutely, and when there's so much momentum behind this, the thing that I find really interesting is you're starting to see Nvidia track along with Bitcoin, and Nvidia is actually lifting the S&P 500 and also the Nasdaq. So in terms of the concentration, it's getting even more pronounced in US markets. So people will be looking for a broadening out to actually occur there, because otherwise it does become, I don't know, few people are starting to, including me, reminisce about when we saw some of those other coins going parabolic, like Shiba Inu up 56% yesterday. Reminds me of 2021. Nevertheless, in terms of our second theme, premiums pumping, and of course we are talking about health insurance premiums, which have been given the go-ahead by the government to go up by about 3.3%. And I was having a look. My health insurer, NIB, is talking a 4.1% rise. So I might have to proverbially shop around.
Yeah, compare the market, as Koshi always says. 2.89% I think is HCF, which is what I'm with. Right. Yeah, so as you say, there's some up and some down. But it was really interesting, analysts saying, look, it hurts, obviously, but historically the increase is lower than what we've seen in previous years, and it is below inflation, except maybe yours. Miners on the move as well. China came out with its GDP print. No surprise, they're targeting 5% growth again this year, and gold stocks doing very well as well. Precious gold, the precious metal, I should say, at a 3-month high. Yeah,
so that is the second day that we've had gold glittering, because we did have that yesterday as one of our 3 themes. So I had a really good chat today with Carly Garner from DeCarlyTrading.com, and she's gorgeous, and she just made this wonderful point that gold can do nothing for months, actually years, but then when it starts to move, it starts to move. And her view is that we're seeing gold in one of those starting to move patterns. So check out Carly's thoughts on the trade today. Now, should we have a look at some of the sectors, Jules, and see what's been happening? Because with those premium increases on insurance, healthcare stocks, we're in the spotlight today, and we can see Ramsay and CSL in the green, and some of the other ones like Sonic, Ansell and Cochlear were being sold down.
Yeah, I don't think that's a great overall impact of or snapshot, I should say, of the sector, because the sector itself is up by about 1%. Healius and Telix obviously looking good. Having a look at the miners, that whole sector up by 0.5%. BHP, Rio, Fortescue, South 32, apart from South 32, all tracking higher, and utilities was the worst performer today.
There we go. Origin Energy, actually Origin was off ex-dividend today, so bear that in mind. We have had a number of stocks going ex-dividend, and Meridian and AGL were also up. And yesterday we actually had a bid for Genex by a Japanese company, so that was very, very strong. Now let's have a look at some of the top stories today, and Healius was one of the top performers, up 14%, and we have seen a change with the CEO, with Paul Anderson has been named as the new CEO in that company.
Telix, I mentioned, doing quite well, up more than 1.5%. This is on plans to buy the Canadian tech, do you say ARTMS or ARTMS? A $126 million deal there.
And a share registry company, Link Administration, that stock is seemingly flat on the day after announcing that its redress scheme following the collapse of LF Woodford equity income will become effective on Tuesday.
And we mentioned there BHP and Rio, of course, in focus after China's GDP target. Let's get more on that and join our guest, Kyle Rodder from Capital.com. Kyle, what a surprise, a 5% target that China is trying to reach.
Yeah, exactly along lines with expectations, of course. I think everyone was sort of flagging that would be the number. Of course, it was last year's as well. Perhaps the disappointment might have come from the fact that there wasn't as much substantial guidance in terms of the kind of policy that might be tweaked to get there. So arguably that's why we might have seen a little bit of weakness coming through Chinese equities and equities tied to China in afternoon trade, notwithstanding reports in the afternoon that there was further ETF buying from state-backed funds as well. So, I mean, I think my key sort of takeaway from the at least start of the People's Congress is that there really isn't an incredible change of tone, priorities or objectives from the central government. In fact, I think it still remains fairly focused on some of those longer-term restructuring or longer-term objectives around restructuring China's economy, and less so about running, very counter-cyclical policy above and beyond just sort of maintaining a moderate level of growth, and then also, of course, too, trying their best to sort of maintain a level of financial stability. So it'll be sort of fascinating to see whether we can continue to get Asian or Chinese equities in particular moving higher, because they still look fairly constructive in the very short term, albeit within what's been a very long downtrend. But perhaps we'll have to wait for a little bit more information over the coming days to see if there's anything else substantial that comes out that could potentially boost the market, of course, to perhaps bring further what I would define as sort of further disappointment.
Now, it's a big week this week, Kyle. We've got quite a lot of jobs data due out of the US, and we've got our GDP print tomorrow. I'm just having a look at the Aussie dollar. It keeps sort of squeaking under 65 cents. Do you think we're going to have a resetting of rate cut expectations off the back of some of this data this week?
The GDP, I'd be pretty surprised. I mean, I think the current account data was very strong today, and perhaps just by virtue of, again, very strong imports, that it could keep that quarterly number in positive territory and, at least stop the headline writers, obviously turning on caps lock and smashing the word recession into their laptops. But still, I mean, what we're likely to learn is that, really under the surface, the economy remains fairly weak, that we continue to see fairly soft domestic demand, and that, really the things that's going to be keeping the economy up is things like strong exports as well as migration, which really isn't anything to do with the inherent fundamentals of the Australian economy, but of course global factors, as well as, maybe some policy cheating a little bit, bringing obviously just demand through the importation of people, more or less. So I don't expect that, again, to necessarily move the markets a great deal. Of just GDP very rarely does because of its backward-looking nature. But you touched on the jobs figures in the next few days. I think that's really what we're going to gear up to. And the other thing as well worth considering is the ISM services PMI tonight, which I think will be the most important thing in terms of immediate event risk, because it comes, obviously in the US session ahead. We'll be looking very closely for some of those underlying measures of obviously demand in the US economy and the services sector, but also prices too, because if you do simply overlay the ISM services price index with just any US inflation gauge in particular, it shows that it's fairly correlated, and it also would show that recently that price sub-index in the ISM services PMI has been tracking higher recently, and sort of adds to that notion that perhaps price pressures, at least in some parts of the US economy, are sticky, especially those parts of the economy that are very demand sensitive, perhaps even more so sensitive to the labour market and its strengths and wages and things like that. So that's tonight. Then we'll shift to that focus around the jobs market, and we'll go ahead to informing when that first potential rate cut from the United States comes about, with Powell testifying the next few days too. There is the possibility that gets kicked further down the line. We've got about 3 cuts priced into the market now, which is where the Fed has projected where it thinks policy will be. So it's a pretty interesting sort of balance of risks now. And, sort of highlights, again, the resilience in some of these markets, especially gold, especially Bitcoin, but equities as well, despite the fact that we've got rate cuts being priced out.
Well, to that point, with Bitcoin and the rally towards a record, are you in the camp that coupled with some of these records we're seeing on share markets is at the frothy end, or is it going to garner a little bit more momentum?
I think it's going to gain more momentum just because of historical precedent. You tend to see these things run, and I know this is a little bit bold, and I can say that because I'm not held accountable to anything, but $100,000 Bitcoin wouldn't be out of the question in terms of, mapping the current rally versus the other bull markets that we've had in 2021, 2017, and 2013. It would be fairly consistent with those. I think there is a fundamental impetus behind this, which is the ETF flows, as well as the upcoming halving, which is a sentiment boost, but does speak to the supply and demand factors in the market. But there is also this element too that perhaps financial conditions are quite loose. Once again, that might explain the kind of gold rally, along with obviously the ongoing strength in equities. Even though real yields haven't shifted meaningfully, they're still quite positive and suggestive of maybe slightly more restrictive financial conditions. But a piece of trivia that I could probably bring to the table that we're seeing, the altcoins, or perhaps I won't use the cruder language, but it's probably more appropriate way of referring to some of these tokens. Pepe, Bonk, Shiba Inu, of course, all these other names are getting really strong attention on our platform, and we're once again seeing this kind of surge towards just basically crappy crypto tokens, which says to me that there's a little bit of craziness going on out there in the market. So there's definitely euphoria, but as we know, these kinds of periods of mania, especially in the crypto market, in the absence of maybe Powell coming out the next couple of days saying, all right, stop the party, which is very unlikely to happen, but if that were to occur, obviously things would change. But these things can carry on for a little while, and again, I don't see that a Bitcoin at 100,000 at some point in the next few months would be entirely out of the question, based on basically prior behaviour in crypto markets in these situations.
Tom Lee from Fundstrat could do another parade of getting it right, because he's been calling $100,000 on Bitcoin. But geez, some of those other ones, as you say, Kyle, Shiba Inu up 56% last night. It's a bit racy. It's a bit 2021-ish, isn't it? Remember those days, locked in at home, and my son was buying not a crypto racehorse, but what were they called again?
The meme stocks.
That Bored Apes, something of that nature. I'm not too sure, but I mean, on the desk, honestly, we're getting, obviously we have to manage the flow, we have to manage the risk in the book, so we have to manage obviously, our liquidity providers and their expectations, and we have been having to be very, very responsive to some of the requests coming through and the orders coming through for some of these altcoins. Again, people seemingly, and again, I'll use some foul language because you can on digital streaming, obviously, people just taking the piss with silly coins. So effectively, it screams irrational behaviour, but like I said, it can carry on for a while, so we'll see how we go. And if there's any other funny names of tokens that I discover people are buying, I'll make sure I send them over, because they're good for a laugh, if nothing else.
Exactly. All right, Kyle, I love how you're not accountable for anything. I wonder if people in your personal life believe that or not. Kyle Rodder, Capital.com, thanks so much for your time. And on that theme, of course, the stock of the day, Danny. Yeah,
it was iShares Bitcoin ETF, and our experts were Mark Morland from Team Invest and Sean Hickman from Market Matters.
The ETF is fascinating. We actually look at it quite closely because it's a really good leading indicator for liquidity in the market. If people have got free cash to buy Bitcoin, they've probably got free cash to buy equities.
Right.
And if you overlap the charts, it's a leading indicator. So it was up 7% last night. Equities are breaking out to new all-time highs, well, they have been for a while. Bitcoin is surging out of control. Last night we also said, last 48 hours, strong moves in gold. There's a lot of money out there. There's a lot of money looking for a home. Valuations are edging higher. I think we got about $2.5 trillion of money sitting with private equity, again, looking for a home. They're desperately trying to get some returns, or they're going to lose their mandates. There's money out there, and Bitcoin is showing it. So I've got no interest in it, but it tells me that there's cash out there, and good equities will still do very well. Gives me encouragement to be long stocks and not to worry about the market, even though the papers are full about doomsday. They have been for the last few years. They don't look very good today.
Yeah. And I think it's a fantastic thing, but it's not an asset in itself. It's a system which is limited to 21 million Bitcoins eventually. I think it's 19.5 now or something. So it can't inflate. It can inflate based on values of what people pay for it. So I can see why it totally appeals. My youngest son, who's now 32, he's been in it from the beginning, and he used to use Bitcoin to pay for all his computer components.
Right.
And he had 26 Bitcoin on a jump drive, which he lost. And he tried to pull the house apart trying to find it.
Right.
Lost, gone. So
26.
Yeah, because back in the day,
it's $100,000 per
each.
one now.
Yeah, that's right. Anyway, the point I'm making is, a lot of the advocates are young, next generation. We're, as you said, dinosaurs, but I have no problem with it as a place to. If you want to put money, it's very portable because you can take it anywhere in the world on a little jump drive, but you can't take more than $10,000 cash out. So it's got a lot of things going for it, but it's not an asset in itself.
All right, let's have a look at the leaders and laggards in the day's session, starting with the leaders today. Healius, we mentioned in focus today, up by more than 14%. Iris, which we get a lot of our information from, also doing well, along with Genesis Minerals, Regis Resources, obviously on the back of that gold spike, and Emerald Resources as well.
Absolutely. Now let's have a look at some of the laggards and see what's happening there. So very much sitting in the lithium space as well as the critical minerals. So Pilbara, Sayona, Core Lithium, IGO and Linus, all down by between 6 and 4% today. So having been up yesterday, it looks like it's all over again for lithium today.
In the small end of town, we had Paragon Care. Wow, look at that, up almost or more than 41%. Catalyst Metals, Smart Parking, Southern Cross Gold and Drone Shield all looking good as well.
And the small laggards are Aravella Therapeutic, off by about 17%. And then we have the likes of Gold Hydrogen, Visan, Global Lith and 88 Energy, all off as well today.
All right, another busy night overseas. We've got US factory orders data, the ISM and S&P Global Services Indexes released, and a little bit of earnings in the retail space from Nordstrom, Ross Stores and Target.
And I think Powell starts his two-day hearing at Congress. Now tomorrow, let's see what is going on. Of course, how we could forget Australian GDP for the fourth quarter, and we'll be continuing stocks going ex-dividend. So QBE, Treasury Wines, Northern Star, Reliance and SIQ, that's caught me out, that ticker code. But just be aware that we are in the ex-dividend season at the moment. So should we have a final check, Jules, and see where we are on the markets?
Yeah.
The ASX 200, I've got it down about 12 points.
Yep, I'm just going to say SIQ, I did a quick Google, Smart Group Corporation.
Smart Group, well done.
So S&P down 8 points, 0.1%. That was after, of course, hitting that fresh record, as we touched on, Pilbara and Core among the losers, but very much healthcare and mining stocks doing quite well.
And just having, before we get to the survey, just having a look at the minis, they're currently off, and the Aussie dollar, for what it's worth, if you're planning your trip, it's currently trading just under 65 cents. But, Jules, it's our annual subscriber survey and it's open till March the 11th.
Actually, March the 13th.
Oh, 13th, sorry.
We'd love it if you could take a few minutes and fill it out so we can make AusBiz better for you. To sweeten the deal, someone's going to win a managed investment portfolio from MPC Markets worth $5,000. There are other prizes too.
And you just need to go to ausbiz.co/survey24 and you have until March 13th to be. You've got to be in it to win it, Jules.
You do. I believe, is that next Wednesday, March 13th? I think that sounds about right.
I can't believe that we're suddenly going to be in the middle of March. Well, it just looked like February just zoomed by. Nevertheless,
crazy.
Keeps us busy, doesn't it?
It does. All right, that is it for this Tuesday here at AusBiz. We'll be back bright and early tomorrow, and of course a big day with that GDP print coming through.
Have a great evening.